Hey everyone, and welcome back to the Stock Market Drill Down. I'm Mike, your beloved host, and today we're diving deep into the market action from Friday, June 6th, 2025. We'll break down what moved the needle yesterday and then cast our gaze forward to predict what the coming week, starting June 9th, might hold for your portfolio. Let's get right into it. Alright, let's kick things off with a comprehensive look back at Friday, June 6th. It was an unequivocally bullish day on Wall Street, marking a robust rebound from previous sessions and securing a second consecutive winning week for the major indices. The sentiment was distinctly positive, largely driven by encouraging economic data and an easing of trade-related anxieties. Notably, the S&P 500 achieved a significant milestone, closing above the crucial 6,000 point mark for the first time since February 21st. Here's how the major indices wrapped up the week. The Dow Jones Industrial Average saw a strong surge, rising by 443.13 points, which translates to a 1.05% gain to close at 42,762.87. The S&P 500, our broader market indicator, climbed a solid 61.06 points, or 1.03%, finishing the day at 6,000.36. This puts the benchmark index within just 2.3% of its all-time record closing high set back in February. And over on the tech-heavy NASDAQ composite, we witnessed a healthy 1.20% increase, adding 231.50 points to close at 19,529.95. For the entire week, these gains translated into impressive performances. The Dow rose 1.2%, while the S&P 500 tacked on 1.5%, and the NASDAQ Composite added a significant 2.2%. This marks the fifth time in 7 weeks that these major indexes have seen weekly gains, underscoring a resilient market. Looking closer at what fueled these movements, tech and airlines were definite winners. While some consumer names faced headwinds, tech sector strength mega-cap tech giants were largely higher. Companies like Alphabet, ticker Goog, and Amazon, ticker AMZN, each climbed roughly 3%, while Apple, ticker AAPL, and Meta Platforms, ticker Meta, were up nearly 2%. Chipmaker Nvidia, ticker NVDA, also gained 1%, and Microsoft, ticker MSFT, even edged up to a new all-time high. Palantir Technologies, ticker PLTR, was a standout performer, popping 6.5% to lead S&P 500 advancers. This surge was attributed to positive sentiment surrounding its expanding government business, even after a couple of sessions of pulling back earlier in the week. Moderna, ticker mRNA, wrapped up a volatile week with a notable 5.1% gain. The biotech company had announced FDA approval for its new COVID-19 vaccine for older and higher risk patients, despite earlier controversy. In the airline sector, United Airlines, ticker UAL, soared 4.8% on news of a strategic partnership with Spotify, allowing passengers to access streaming content on seatback screens. Rival Delta Airlines, ticker DAL, also saw a healthy increase of 4.3%. Tesla, ticker TSLA, advanced 3.7%, recovering some of the significant losses it suffered on Thursday. This recovery came as the public feud between CEO Elon Musk and U.S. President Donald Trump showed signs of de-escalation heading into the weekend. Analysts largely reaffirmed their bullish stance on Tesla despite the recent tensions. On the other side of the ledger, some companies face pressure. Lululemon Athletica, ticker Lulu, was the biggest decliner in the S&P 500, plunging a steep 19.8%. This came after the athletic apparel maker issued lower than expected sales and profit guidance for the current quarter and trimmed its full-year forecast, citing cautious U.S. consumer spending and efforts to mitigate tariff impacts. Broadcom, ticker AVGO, slipped 5%, receding from recent record highs, while the chipmaker reported record quarterly revenue of $15 billion, largely driven by strong AI semiconductor demand. Its sales and adjusted profit results were only roughly in line with consensus forecasts, disappointing some investors who might have expected more. What drove yesterday's market optimism? The main catalyst was the May non-farm payrolls report. The U.S. Labor Department reported 139,000 new jobs, slightly lower than previous months, but still a sign of labor market resilience. Unemployment held steady at 4.2%, near historic lows, and average hourly earnings rose 0.4%. This eased fears of a rapid slowdown and boosted risk assets. Easing trade tensions also lifted sentiment, with hopes for progress at the upcoming U.S.-China meeting. The bond market reacted quickly. Yields on the 10-year Treasury jumped to 4.51%. Investors now expect the Fed to be less urgent about cutting rates if growth stays strong. Wall Street expects rates to hold steady at the June meeting, but is watching for any new Fed signals. Let's look at the week ahead, starting Monday, June 9th, a pivotal stretch for markets. Investors are watching key economic data, especially inflation, which will shape the Federal Reserve's next moves. The highlight is the May Consumer Price Index, out Wednesday, June 11th at 8:30 a.m. Eastern. Analysts expect a modest 0.2% monthly rise for both headline and core CPI. Annually, that's about 2.5% for headline and 2.8% for core CPI. Any surprise in these numbers could spark volatility and shift expectations for Fed rate cuts. Thursday brings the Producer Price Index, with forecasts pointing to a slight decline. Also Thursday, initial jobless claims are expected around 247,000. Friday's University of Michigan Consumer Confidence Index will gauge consumer optimism. Meanwhile, U.S.-China trade talks resume in London, adding uncertainty. Technically, the S&P 500's move above 6,000 could set a new support level. The VIX remains low, but could spike with any surprises. With so much at stake, expect sharp market reactions. Stay focused on fundamentals and risk management. That wraps up our detailed market summary and forecast for today. I hope this gave you a comprehensive picture of where we stand and what to watch for in the coming days. If you found this video helpful, please give it a thumbs up, subscribe to our channel for more daily market insights, and definitely hit that notification bell so you don't miss our next update. And now, I want to hear from you. Let me know in the comments below. What are you most focused on in the markets right now? Especially with those critical inflation reports coming up. I love hearing your thoughts and insights. Thanks for tuning in, and I'll see you in the next one. Happy investing.